Venezuela could be weeks or years away from sending meaningful oil back to world markets. Investors are watching 5 precise signals, miss one, and the recovery stalls. Here they are. Political change matters, but production returns only when rigs, contracts, insurance, payments, and legal clearances are real and sustained. In this video, the 5 investor signals why each matters to crude flows, and the single metric traders track most closely. No hype, just the operational checklist. Signal 1. Rising rig counts and confirmed field rehab contracts. Venezuela's major fields have been undermaintained for years. Wells need pumps, downhole work, and spare parts. Imagine a car that's been sitting in a garage for a decade. You can't just turn the key and expect it to work perfectly. The same goes for these oil fields. They need a massive overhaul. A single contract for field rehabilitation with international service firms is a signal that the physical capacity is about to move. So, what should you watch? Keep an eye on rig count timelines. Are more rigs being activated? Also, look for official announcements from service companies and watch for supplier shipments arriving at Venezuelan ports. These are the physical signs that work is actually starting. If you see headlines about new equipment or parts being delivered, that's a huge green flag. It means the foundational work to get the oil flowing is underway. This isn't just theory, it's the nuts and bolts of production. Without functioning fields, everything else is just talk. Signal 2. Multinational service companies signing visible contracts. Local operators in Venezuela simply don't have the capital or the cutting-edge expertise to scale up production quickly on their own. This is where the big international players come in. Major oilfield service firms or commodity traders start publicly submitting bids for projects. That's a massive signal. Even better is when the Venezuelan government officially ratifies contracts that name these foreign contractors. Why? Because it shows a commitment to bringing in the necessary resources and technical know-how. Think of it as bringing in a world-class construction crew to renovate a building. They have the tools, the blueprint, and the experience to get the job done right and on schedule. So, look for news about companies like Halliburton, Schlumberger, or Baker Hughes getting involved. Their public participation is a near-term production multiplier. Without them, any recovery would be incredibly slow and inefficient. These contracts are the bridge between potential and actual barrels of oil. Signal 3. Falling insurance premiums and tanker bookings to Venezuelan load ports. This is a critical one that many people overlook. Even if the oil is pumped out of the ground, it's useless if it can't be shipped to buyers. Right now, moving anything out of Venezuela is risky, which means insurance costs are sky-high. Some shippers use what is called a shadow fleet of older tankers willing to take that risk, but that's not a sustainable long-term solution for a major market comeback. For a real recovery, you need the big, recognized shipping companies to feel safe sending their vessels. That happens when insurance premiums for voyages to Venezuela start to drop. So, what's the telltale sign? Watch the data on tanker arrivals. Are more mainstream vessels booking charters? Check the charter rates themselves. Keep an eye out for official notices from major maritime insurers. When they signal that the risk profile is improving, it means the logistical floodgates are about to open, allowing that oil to finally reach global markets. Signal 4. Functioning hard currency payment mechanisms. This might sound a bit dry, but it's absolutely essential. You can have the oil, you can have the ships, but if the buyer can't pay the seller, the deal doesn't happen. Because of sanctions and financial instability, simple transactions are incredibly complex. Buyers need reliable, legal ways to pay for the oil in a stable currency, usually US dollars. This could involve special correspondent banking relationships, secure escrow accounts where the money is held by a third party, or specific legal waivers from governments that allow the transaction to proceed. If you see reports that major commodity traders are successfully clearing payments in dollars or another acceptable currency, that unlocks the entire flow. Without this financial plumbing, oil might be sold on paper. but it won't actually be loaded onto tankers and legally delivered. It's the final handshake that makes the whole deal real. Signal 5. Clear legal permissions. This means sanctions, waivers, export licenses, or international guarantees. This is the ultimate green light. Even with rigs turning, contracts signed, and ships waiting, a lack of legal certainty will keep the biggest and most reliable buyers on the sidelines. No major corporation wants to get tangled in a legal mess or violate international sanctions. So, the signal to watch for here is official announcements. Are governments like the US issuing new, clearer licenses or waivers? Are there legal opinions from top international law firms confirming that certain types of business are now permissible? This legal framework provides the confidence that large-scale, long-term investment requires. It's the difference between a few risky spot deals and a steady, predictable flow of oil returning to the market. When the legal path is clear, the big money can move in without fear. Of course, there are major risks. Social instability, a chronic shortage of capital, ongoing legal disputes over assets, and unpredictable geopolitics could derail everything. What's the timeline? Field rehab and service contracts can start showing results in a matter of months. But normalizing insurance and payment channels often takes much longer. The fastest plausible recovery requires all 5 of these signals to be moving in the right direction, all at the same time. It's like a combination lock. You need every number to line up for it to open. So, if you only have time to track one thing, what should it be? Track the rig count plus visible service contracts. That combination is the best predictor of actual barrels hitting tankers. It's the most direct indicator of boots on the ground and shovels in the dirt. This has been an operational checklist, not investment advice. If you find any credible links to capital expenditure plans or confirmed contracts, paste them in the comments below. I'll do a follow-up deep dive on any confirmed deals. Thanks for watching, and don't forget to subscribe for more analysis.